Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. This is a Forex Quick Look. We're going to take a look at the dollar versus Canada. Today's date is October 29, 2024. Let's get started. Now, my video right now is going to be on the technicals that are driving the dollar versus Canada. Adam has a counter view from a fundamental perspective. It's not really a counter. It's in addition to this technical view, talking about how the Canadian dollar will continue to struggle for various reasons. So I suggest that you look at and you watch that video to get a full view of what is going on in that currency pair from both a fundamental and from this technical view. Looking at the chart of the dollar versus Canada, I'm focused first here on the daily chart. You can see how the price is moving up toward the high price that we saw for the year at 1.39458. That level was reached in the month of September, October, August, and it was the highest level going all the way back to this point in 2022. So a major high being approached here, and another major high up here at 1.39458, 1.39770. Our high price today has reached 1.39289 so far. So getting closer and closer to those levels on the top side. Break above those levels from a technical perspective, things would be more positive. Now, we're also moving above this 1.3859 to 1.38983 swing area. The swing area comes before the swing highs, aforementioned swing highs, and it consists of different swing highs coming back through here and through here before moving to the upside in this year, breaking above the high of the swing area and moving up toward this 1.39458 level. That failed rather quickly, and we started to use this level as resistance, push to the downside. What we have to be careful from a technical perspective is that we do something very similar to what we saw right here. That is, break above this swing area, then come back down and break back below this area right here. That could lead to buyers turning to seller for whatever reason that may cause that. Certainly be not what was expected, but may be still possible. So be aware this is going to be a close risk level or a bias defining level for both buyers and sellers. That's down at 1.3859 level. So be aware of that level on the downside. Now, let's take a closer look at the hourly chart to see if there's any other clues that we as traders should be focused on from a trading perspective, from a more immediate perspective. And what I like to look at in this chart is, you see this green line right here. This green line represents the 200-hour moving average. And ever since this this day right here, where the price moved above both the blue and the green line, that's the 100-hour moving average, 200-hour moving average, the price has not been below both those levels. Yes, we moved below the 100-hour moving average. That's the blue line right here, and right here. But other than that, we've also found support against the 100-hour moving average. Let me get rid of all these arrows, and I'll show you those supports where the market said, hey, I'm going to lean against this level and find support buyers right there, right there, right here, right here, right here. And then we tried to do it right here, but then moved above the level and just use that level as support. We finally, right here was the last time the price really got close to that 100-hour moving average, and that led to this sharp move to the upside. So guess what? Going forward, if the price were to move below the 100-hour moving average, that would probably give the sellers a little bit of confidence, let's just say, and give the buyers a little bit of anxiety that perhaps we have something more in plan for a downside probe for this currency pair for whatever reason it is. Fundamentally, it doesn't make sense to move below those levels, but there could be a story that does change the view. And technically, also, traders can take charge, especially if markets get overbought like they probably are in this case. Look how far away we are from the moving average right now. So that often leads to either some sort of consolidation or corrective move to the downside. So pay attention to the rising 100-hour moving average as a close support level. Doesn't necessarily mean that it's going to change the stripes of what has been a bullish run to the upside from the low right here, so September, to the high right here. But it could temporarily make a tiger look like a leopard or something like that, and have traders thinking more in terms of a corrective move to the downside versus a continuation of the upside run. So be aware of that. That's my technical look at the dollar versus Canada. Once again, take a look at the Adams video on the fundamentals. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.